What's up, everybody? We're doing something different today, and this is actually our first episode on financial freedom with Da'zjon Tinae. Now, this channel is made specifically to give a lot of individuals some insight on how to go about the investment journey or how to improve their finances. So I hope that this channel gives a lot of people great content, and let's just check out to see what our guests have to say about today. Now, in a few seconds, we'll get a phone call and we'll be able to talk with a number of different people about what's going on. So here's the first phone call. Hey, this is our first phone call today, and I wanted to see what's going on. So could you let the guests know exactly what your name is and give us a description of what's going on with you and your situation?
So thanks for taking my call. My name is Jared. So I want to get into investing. I'm 26 years old. I'm making roughly around $50,000 a year. My wife is full time at school, so right now I'm the only one bringing money in, and we have just my son right now. But yeah, I want to get into investing because I just want to make some more money and hopefully save up, enough for my son's college in the future and everything.
Okay, well, just based on what you're saying, it does sound like you have a good bit of income coming into the household. So my question for you would be, what are your expenses like in the household? I know you said you're bringing in about roughly $50,000 on your own. So what kind of expenses are you looking at? And is there anything that's within your budget that's, I would say, interfering with anything?
So I have, since she started school, I've had, I've used up a lot of my income trying to cover, some of her expenses in the meantime.
Okay.
We have a few credit cards we're trying to, chop down on. It's not, struggling, but it's not, great at the same time. You get what I mean?
Okay, yeah, that definitely makes a lot of sense. So one of the first things that I would tell you in terms of going about the investment process, I would say first go about looking at downsizing your expenses. And the reason I say this first is because it honestly opens up a great pathway for you to see a nice return on your money. So usually what I tell people, if there's anything that you can cut back on, especially when you're interested in investing, go ahead and take that leap and do that because it'll open up a tremendous opportunity. So for yourself, someone that's not really going through much hardship with finances and that's interested in investing, I would say first start off small. Do you have 401k at your job? Is there any outside of investments that you're getting through them?
Yeah, I have a 401k through them. I just put a little bit in it every month for the past, I think it's about 2-3 years.
Okay.
It's not a big account right now. I think it's accumulated to maybe about $2,000, but
okay, that's a start. That's a decent start. So one way I know that you can get into saving specifically is, let me talk about this first. What are you doing with your savings account? How do you actually save money? Where do you keep it?
So I keep it in just a regular savings account with Navy Federal.
Okay.
Every month I just put a few $100s in.
Okay, and that's not bad at all. But one thing that I would like to say, especially for a lot of young people that's looking into investing, is that you want to put your money in places where you can get the most out of your dollar. So what I'm saying is, hypothetically, the fact that you're putting your money in Navy Federal sounds great, but you're getting beat due to inflation because the Fed has a goal of about 2% a year. So you get about 0.09% in your savings account with Navy Federal. And what I'm saying is, let's just say, for example, you have an account with Ally Bank with a high yield savings. They have a 1% annual percentage yield, meaning that you get 1% on the money that you put into your account. So let's say you started off with a small investment of $1,000 in a high yield savings account. At the end of the year, which is 12 months later, you'll have about $10 in interest just accrued over the lifetime of having your money in that account. So there are some people that say, oh, well, that's not a lot of money. And then that's when I come back and I tell them, well, you're getting monthly dividends. And on top of that, look at your typical bank account where they're giving you about 3, maybe 4 cents, maybe even a penny every 3 months just for holding your money in that account. For someone like myself, I'm not really interested in that because it's not maximizing my dollar. So just starting off with savings alone, I would look at making a side account first and then trying to accrue some money there with interest, because rates are real low right now, but I still believe there's a really good opportunity compared to just keeping it in standard savings. So if you can make that leap and put your money there, you would at least have a way to cut back on a lot of the inflation that's devaluing your dollar. So that's the first thing. There's a lot of apps out there that I suggest that you look into, and I think there's a lot of opportunity out there. But another thing, you did say you were 26, so my question for you would be, have you heard anything about the stock market? Do you know anything about bonds? What are you most interested in? I just want to hear a little bit about what you think.
I like to get into both. I'm a little bit more interested in stocks. I know a few coworkers that say they invest and they do pretty good.
Mm-hmm.
But I don't really know where to get started. There's like a lot of different places, that'll say they can help you, but it's kind of confusing to know who to go with, who's trustworthy. I hear some people get scammed. So.
Yeah, and that does actually happen a lot. And I get a lot of phone calls and messages on social media from people saying that they've heard about a lot of multi-level marketing schemes. And honestly, what I would like to say is that you should really stay away from those type of things, because you don't really need to work with anyone in multi-level marketing on any type of investment goals or principles. Because, let's just face it, there's financial advisors out there. What makes them more credible than them? So don't really get into the habit of giving your money to people like that, because I know they don't know what they're talking about. But for yourself, I think there's a lot of great content that you can find on YouTube, and even other great social media platforms, not including, people on Facebook, of course, but a lot of good channels out there and professionals that are on a bigger platform. So my advice to you would be definitely seek looking into the stock market if that's something that you said you've heard. And for myself, I would honestly say I have over 10 years of experience dating back since high school. So for someone like you that's 26 years old that's interested in investing, that's a very long-term time horizon to get into investing. I would say you have over a 50-year time frame to invest. So just looking at it from that's a really big opportunity for you. So I know a lot of people usually have questions about the stock market. Is there anything in general that you've heard or anything that you may have wanted me to elaborate on to give you some more insight on that? Like what kind of companies are you interested in, and what do you really think you should, do you want to know going into it?
So recently I've followed like a few groups on Facebook and been trying to read a little bit. It's a lot of different terms, but the one I see kind of often other people mention is like when a stock is like overvalued or undervalued, and I didn't really understand like what that meant and how do they know that if something's over or undervalued.
Right, and that's actually a really great question compared to what I hear a lot of other people ask. And what I want to say about that is that you really know when to buy or sell a stock, or when one is overvalued or undervalued based on a couple of different principles, either fundamental analysis or technical analysis. And what I usually tell people about fundamental analysis is that it's pretty much just digging into the financial data of a company. So income statements, balance sheets, cash flow statements. And then with technical analysis, it's more of looking at the volume, better known as how much a stock is being bought or sold within a day, and or using charts and graphs, of course. So you may hear a lot of candlestick charts. You may hear people talk about the relative strength index, the moving average convergence divergence, and a number of other key indicators. Those are some ways that you can determine whether a stock is the right purchase for you at that time, or whether you should exit the trade in general. But essentially it all comes down to one of those two things. What I would definitely recommend, if you're a person that's really good at numbers or someone that can really do a lot of great comparison and contrasting, definitely look into fundamental analysis, because it can give you the hardcore numbers on what company is really effective and what's not, because it gets down to the nitty gritty of everything versus technical analysis, where you see traders pretty much looking at it more on a short term scale that's just looking for short term profitability. So those people are just looking to scout positions, meaning getting to a trade real fast and then exit, usually within the same day or within a course of a week or so. So they're just trying to get short term gains and to maximize just on trading volume alone and the buying and selling pressure of other traders. So what I would recommend for you, look at it more on a long-term perspective, because if you focus on a long-term strategy, you have a lot of success just awaiting for you versus those that get into the market that just want to get into a lot of short-term speculative stuff like this Apple Tesla split that a lot of people I heard are losing money on now, or just any type of other speculative move that doesn't really give a great return. So what I recommend for you, definitely look into one of those key things between fundamental and technicals, or even being a tweener between both of them, because it can maximize the amount of money that you make within the market. Now, that's another great way to look. And like you said with bonds, you can do a lot of great things with that as well. And I usually tell people to look into websites like treasurydirect.gov, especially since you have a kid. How old is he, if you don't mind me asking?
He's 4 years old.
Okay, 4 years old. That's really great, because one thing that I really recommend a lot of parents to do for their children, especially if they're planning for them to go to school or just getting them right on the right financial path, try to get them into savings accounts, especially high yield, or try to develop some type of plan that can give them some financial stability along the way. For myself, I know a lot of people may not agree all the time, but one thing that I do for my future kids, even though I don't have any, just keeping it real, but I purchase bonds on treasurydirect.gov because they mature in 30 years. One thing about Series EE bonds that I purchase is that they're guaranteed to double within 20 years, and that's said by the federal government. They're 30-year bonds. Me, I'm buying bonds early because when my kids do eventually be born, or I have some in the future, it's going to be close to the maturity date of my bonds, especially when they're in adulthood. So if they decide they want to go to college, my kids will have a lot of matured bonds that have doubled in price and also paid me interest on a monthly basis. And I'm just cashing out on those bonds, after periods of times, just to have something for my kids. So you can get into trust, you can buy some bonds, treasury bills, whatever the case may be, because there's a lot of great options out there for you. So for myself, I love Treasury Direct because a lot of it is tax deductible, and it can sometimes help increase your paycheck as well, which I have done for a majority of my clients as well. So a lot of great opportunity in there. What are your thoughts on it? What are you thinking so far?
I understand. You're helping me understand a lot better. You actually kind of dabbled on the subject, and I was going to ask about that too, about the Apple and Tesla splits.
Right.
I saw a lot of people in like the Facebook groups I follow. They were kind of like debating on if it was good or not. I didn't know what a split was in general, so I didn't really try to, jump in or anything and mess up. So I don't understand what is a split.
Right. A split for a stock is just generally a company making its stock more affordable to retail investors. So what I would say is, for example, I would say in 2014, earlier that year, Apple was around $450 a share. After a split, I believe it was about a 4-to-1 split. Apple was trading at about, matter of fact, I believe it was a 5-to-1 split. So it was trading at about $96 a share. One thing that I want to say about stock splits historically for companies like Apple, after splits, the company has been a lot more effective in terms of long-term success. But at this time period now, with uncertainty with the 2020 election, with so much things going on with policies and everything that everyone is arguing about, of all this controversial stuff, like it's running up a lot of commodities and precious metals out there like silver and gold, and things of that nature. So I usually don't recommend looking into a lot of these splits and everything because I feel like the stimulus is really putting a lot of fake value into the market. And I'm not trying to say that to scare you out of not investing in the market because there's always something out there to invest in. What I'm saying is just take the time to look at the real fundamentals of these companies or anything that you tend to invest money in because if there is a hard times, you want to make sure you're prepared for that, especially having the right hedges against your stock. For example, for myself, I was saying for over a year, if you go on my YouTube channel, that gold and silver were some really effective investments over the long term. Now we're seeing gold hit all-time highs, and then you're seeing silver going from about $11 a share to about over 25. So that's just showing us that there's a lot of great potential out there to hedge against your portfolio. So make sure when you're going out, especially at a time like this, that you're looking for opportunities to possibly hedge against your positions, because I think a lot of investors and traders get into the market and they're just buying things at random based on some news that they read, but not necessarily the facts, the statistics, or the real data behind it. They're usually just running off a projection. So I definitely want to say make sure you're looking into the actual numbers, because just because it's more affordable for you after a split doesn't mean it's the perfect investment. All it really does is just puts more shares out there available to people. So it's not like you have a real benefit of going out and buying versus someone that was already in the trade. Does that make sense?
Yeah, it definitely does.
Right. So I think that's a really great start for you. I would say look into Robinhood, Thinkorswim, or some other type of brokerage account that you feel works best for you. I like Thinkorswim. It's free. A lot of great candlestick charting and education. Investopedia.com. TradingView, you can download that on your phone. These are all some really great resources for you, including Finance Yahoo, Google Finance, and a number of other things. So those are some really great ways where you can get out and learn more about investing. But for yourself, someone that's young again, just to reiterate, just to wrap up this conversation, try to make it easy for yourself, especially if you're looking into long-term investing. Look into mutual funds, which are pretty much a basket of diversified securities. They can contain bonds, stocks, and a number of different investments. And it's pretty much diversified for you so that you don't have to go out and buy 10 different companies and diversify it yourself. So mutual funds are great. Exchange traded funds are really great. And those are pretty much like mutual funds, but the only difference is they trade on the stock exchange during market hours. So you can buy and sell them during the day, or just go about single stock diversification if you feel like that's the best way for you. So are there any final concluding questions that you may have for me?
Just on that mutual fund part, is that also like, because I got a Robinhood,
Right.
is that also on there as well, or just the exchange traded funds, I think it was?
Good question. Robinhood is sort of like a discount broker, so they don't really have a lot of investment opportunities compared to other brokers. Robinhood does have exchange traded funds. I will say that. That's where I buy a majority of mine. However, if you're looking into mutual funds and things of that nature, definitely look into a broker like maybe Fidelity and maybe even TD Ameritrade and or Thinkorswim, since they're kind of the same broker. Those are some really great ways where you can get into some mutual funds, and I advise you to look into that if that's something that you want to get into.
Okay, yeah, I'll definitely check it out. Yeah, that's all I had. I really appreciate it.
No problem, man. No problem. And I definitely look forward to hearing from you in the future. Maybe we can pick up some time in the future when you get things rolling. So we'd like to hear from you, if you get some good progress, and definitely look forward to hearing from you later on. And I appreciate you for calling in.
Okay, thank you.
You're welcome, and have a good one.